And it's Friday 13th right here in Lagos, Nigeria. Good morning, good evening, wherever the world you're watching from. This is Business Morning coming to you live from Channels HQ. First of all, let's get a check now on oil markets. Take a look at what's happening there. We see oil prices are up today after the U.S. tightened its sanctions program against Russian crude exports, raising supply concerns in an already tight market, and global inventories are forecast to decline through the fourth quarter. Brent crude futures rose 94 cents, about 1.1% to $86.94 per barrel. U.S. WTI crude gained $1.07, about 1.3% to $83.98 a barrel. Well, despite fluctuations through the week in both benchmarks, Brent is set for a weekly gain of 2.8%, while WTI is set to climb 1.4% for the week after both contracts surged on Monday. The uptick was driven by the potential for disruptions to Middle Eastern exports after Hamas attack in Israel over the weekend threatened a possible wider conflict. And to some company news now. See, Kai app, a digital payment platform, is launched in northern Nigeria's main commercial city. That's Kano. According to the brains behind the project, Kai app was born out of a vision to revolutionize the financial services landscape in Africa to fulfill need for accessible, secure, and customer-centered financial services that cater to the unique needs of Nigerians and Africans at large. Take a listen.
Traditional leaders, businessmen, and investors converge in Kano for the unveiling of the digital payment platform Kai app. Safe, secure, and user-friendly, these were the terms used by many speakers to describe the new digital tool.
Today, KMC Kai app is introducing a revolution in financial digital inclusion in Nigeria, and not only in Nigeria, in the entire African continent. What we have is not another app that we all know. This is a super app that gives us the capabilities to run a lot of our financial operations. It does not stop at sending and receiving money. It also contains a lot of investment opportunities, insurance, and other packages that are built on social banking.
The opportunity through the digital finance is tremendous, and we're very happy to be here in Kano to offer that opportunity in terms of the provision of a state-of-the-art facility that will be an empowering factor for those people in Kano.
One of the unique features of the app is the capacity of the tricycle riders to use it to purchase fuel.
Because of the high cost of fuel, we have made it easy for our users, especially the tricycle riders. Now they can buy fuel on credit and we shall deduct the money when they deposit. We have saved them money and the stress of having to come back 4 times in a day to get fuel, 1 full tank at a go.
The Emir of Kano, His Royal Highness Alhaji Amin Ado Bayero, is optimistic that the app will create job opportunities for the teeming youth in the state.
I'm delighted to know that KMC FMFB has already commenced a nationwide recruitment of young graduates in each of Nigeria's over 8,000 wards, with over 1,000 young graduates, both males and females.
Those behind the innovation are optimistic that the app will provide secure and innovative payment services to individuals and businesses in the African market.
We got that big news yesterday that the Central Bank of Nigeria has lifted the ban on 43 items, putting an end to its Forex exclusion policy that restricted 43 items from accessing foreign currencies. Joining us now for that conversation is Dr. Muda Yusuf, CEO, CPP, joining me via Zoom. Great to have you on the show, sir. Good morning.
Good morning, Ladi.
Fantastic. Yeah, so everybody was excited. Everyone was excited about that news yesterday, even though we got some mixed reactions. But is this the move that finally reduces the pressure on the Naira?
Well, not exactly. Not exactly. The easing of pressure on the naira is a function of supply to a large extent. But what this has done is to normalize the economic policy environment. Because what we had with the 43 items exclusion was a kind of confusion, in the economy, especially among economic players. Whereas in our fiscal policy or trade policy, these items are not under import prohibition. But in terms of access to foreign exchange, it was excluded. So that in itself was creating a whole lot of confusion in our international trade process. Secondly, even the manufacturers, many of them have complained that even...
All right, yeah, I think Dr. Muda was trying to make a point there, but it looks like the internet's having some issues. I don't know if you can hear me, Dr. Muda, but yeah,
I can hear you.
Oh, fantastic. Oh, yeah, I think I lost you for a moment. I lost you for a moment there, yeah.
Some of the items actually on that list are also raw materials that manufacturers need. So it was an issue even for the manufacturers. So the responsibility of determining what should come in, what we should import or not, is a fiscal responsibility. It's a fiscal policy issue. It's not a monetary policy issue. Yes, we may argue that maybe this may open a floodgate of imports or something like that, but that is for the fiscal authorities to deal with. So we need to define the boundaries of these authorities. So that is one thing that this policy has done. If we need to now restrict or streamline the imports, it is for the fiscal authorities to either use tariffs or to use outright import prohibition to do so. So that will bring some clarity and some sanity into the policy space.
Talk to me, what would you say are some of the other drivers of the distortion right now in the FX market?
Well, I mean, this particular issue is one of the key drivers, because all the people who need, importers who need foreign exchange for, all of them are being channeled to the parallel markets, which was, further widening the divergence. But now that the whole place has been opened up and people can now officially now undertake their transactions, they don't need to be manipulating their Form M or changing HS code and all of that, it will help to bring some normalization. So for me, I think this is a key issue. But more importantly, is what the CBN governor has said, the determination to clear the backlog and restore some confidence. Because one major issue we have with the market now is the lack of confidence. That is why there's so much speculative pressure on the exchange rates. So if we're able to remove those speculative forces, with time, we begin to see some normalization of the market.
All right, with this 43 items now removed from that ban list, how do you see this impacting, those industries and those markets where these items thrive?
Well, because of the level at which the exchange rate is now, the incentive to import is extremely low at this time. First, there's no liquidity in the I&E window, and if you must import at over 1,000 naira to the dollar, I don't know what kind of business you want to do with that. So, but for those who are manufacturers who have complained that some of their raw materials have been erroneously included in the 43 items, I think that would be good news for them. They can now at least officially undertake their transactions. And we're likely to see a lot more transparency and disclosure in our international trade processes. But just as I said, if there is a need to streamline imports, that is for the fiscal authorities to do, not the monetary authorities.
All right, what should the government be doing now going forward to, reap the benefits of this move?
Well, there is no, apart from the transparency that it has brought to the market, we cannot immediately point out to the fact that there is any... Well, there is no, apart from the transparency that...
Hello, Dr. Muda. Okay, I can
benefits.
hear. Yeah, I lost you. I lost you again.
Now, at least for the business community, is for us to be able to deal with the challenges of supply being in the market. Hello.
Okay. Yeah, Dr. Yusuf. Yeah, I lost you again. Definitely, the network is playing some games right now. But you can start again. You know, because I lost you for a moment. Then you can complete your thoughts on the last question. Hello, Dr. Muda. Okay, right. Yeah, I guess Friday 13th is really playing out right now with the network. Kind of lost Dr. Muda there. Dr. Muda, if you can hear me, you might have to unmute yourself. Okay, yeah, I guess we try that.
I can hear you.
Okay, fantastic.
My apologies.
Oh,
my apologies.
Yeah, it's fine. So yes, you can complete your
What I was
thought.
saying is that the situation now would make for more transparency and more disclosure, you know, as far as international trade process is concerned. And that will help at least to monitor what is going on in the market. But more importantly, is for the government to deal with the supply side of the FX equation. I think that is the most important thing. And if there is any import that we feel is unnecessary, let the fiscal authorities streamline the list, either increase the tariff or put them completely under import prohibition. I think that is what I mean by the normalization of the policy formulation process, which is a good thing for the economy.
All right, Dr. Muda, thank you so much. We'll keep tracking the progress, and hopefully we get the Naira, we get some stability in the FX market going forward. Thank you so much, Dr. Muda Isu, CEO, CPP, for your contribution today. Thank you so much.
Thank you very much.
All right, so the G24, which is the intergovernmental group of 24 countries created to coordinate the position of developing countries on monetary and development issues, has been very busy and vocal since the beginning of the IMF World Bank meetings. And we have John McQuay had a sit down with the head of Secretariat of G24, Dr. Iyabo Masha, to get the perspective of the group on the current issues and the ongoing meetings. Take a listen.
So this 2023 annual meetings is coming at a time when many countries are in deep economic crisis. There's a lot of fiscal imbalances, current account imbalances, high debt levels. So that has been the major motivation of some of the discussions we've had now. And so we have asked the global economic institutions to increase the financial liquidity available to countries through more IMF resources or more SDR allocation. And we also asked for reform of the governance of the IMF and also of the World Bank. We had some views on the debt resolution framework that is operational, and we are still in discussions on the way forward. So all in all, it has been a very interesting exercise, talking to all the leadership of the World Bank and the IMF, and the interaction with our own G24 finance ministers and governors of central bank.
So you mentioned reform about like 2 times. That means it was a major request at this time. And I also hear a lot about we want more voice.
Absolutely.
So what does this mean?
Okay, in concrete terms, what it means is that for the IMF is a quota-based institution, and all members, all countries that are members have a share proportionate to the size of the economy in the world. Now, because countries' share of the world economy changes over time, then this quota is reviewed regularly. Now, there has not been a major review since 2010, and between 2010 and now, developing countries' share of global economy has risen considerably. So that is what we're fighting for. We want to see the quota allocation to be reviewed so that developing countries will have a stronger voice and a stronger say in the IMF. That's one of the issues relating to IMF governance. The third issue, which has been on the table for a very long time, is the call for the introduction of one more executive director to represent sub-Saharan Africa. I believe that is already in the works. That is probably going to be one of the major outcomes of these annual meetings. But we're still in discussions on the quota review, and we do hope that it will reflect the size of members of the G24 in the global economy.
And the issue of debt cancellation also came up in the midst of all of these meetings, and the issue of the surcharge policy of IMF, as being a major contributor, or maybe not major, but a contributory factor to the increasing debt of emerging economies. What does the G24 see about this?
Well, that's a major concern to us because surcharges only apply to countries that take a lot of advances from the IMF. So a country's advances from the IMF must be a bit close to 200% of its quota before you start paying surcharge. So surcharge is something that is paid, a fee that is paid over and above the usual interest rates on outstanding balances. And the 5 out of 5 countries, the major that are the top 5 countries indebted to IMF, 4 of those countries are members of G24: Egypt, Ecuador, Argentina, and Ukraine is not a member. Ukraine is one of the topmost countries, and Pakistan. Collectively, these countries paid surcharge of close to $3 billion last year. So what we are saying is that with this surcharge, they are even going more and more into debt. And we call for IMF to either cancel the surcharge or modify it, or at least suspend it at a time of global economic uncertainties. And we don't have a solution yet. The IMF is undertaking a review of the surcharge. The position paper should be out before the end of this year, and that's when we expect to hear on this on the final decision.
Do we have a timeline?
Yes, by the end of this year, I believe the policy paper will be out, and we will hear what IMF has, what position it will take. Now, on the debt issue, what has happened is that there's a debt resolution framework, which some countries have already used. Ghana has used it, Zambia has used it, and Sri Lanka has also used it partially. But that framework does not provide substantial debt relief. So that's why we're calling for even more debt relief for countries. So, for example, according to the latest IMF World Bank data, 61 countries are at serious risk of debt distress. And out of these 61 countries, some of them will qualify for the framework, for the G20 inclusive framework. But what they are going to get as haircuts or as restructuring is very low compared to the kind of crisis they are in. So that's also one discussion that is going on, that we want something much more durable than the ongoing G20 framework. And that's something that we put on the table, I would say. We have not reached a good point, I will say, on that issue, but it's something that we're going to be to continue pushing on and maybe retable during the next spring meetings.
But World Bank President believes that all of this is just temporal solution. The more long-term solution would be for Africans to look inwards, to explore their resources, trade in between or among each other, instead of always looking for help and debt cancellation.
Well, I mean, the point is that in order to trade, in order to grow domestic industries, you need financing. So, I mean, Ajay, the World Bank MD, will know that without building roads, infrastructure, investing in industries, investing in transportation, education, health, those require financing. It is only after you have the financing that then you can reap the benefits of that financing and start integrating with other countries. I agree that there's need to look inwards, but there's also need to provide financing.
And must we get financing from the Bretton Woods institutions? Is there any way Africa can do it by itself?
Yes, and that is by domestic revenue mobilization. I mean, it's not going to happen overnight, and the extent to which a country decides to completely use domestic revenue mobilization or get additional resources externally depends on, the policy framework of the country.
And yesterday, the International Energy Agency published the October 2023 oil market report, which shows that Nigeria's crude oil production has risen to 1.35 million barrels per day on average, which is the highest level in 20 months. To discuss the implications of this improved oil output, I have Damilare Shimiu, macroeconomic strategist at AfriInvest Research and Consulting, joining me via Zoom from Ikoyi. Great to have you on the show. Good morning.
Yes, good morning, Ladi. Thanks for having me.
So tell me, how significant is this news, especially against the backdrop of persistent FX liquidity, and what effect should the news have on the economy and the markets?
Yeah, thank you once again, Ladi, for having me on this show. Let me start by saying that if we look at where we're coming from, right, the improved oil output number is an encouraging one. The report shows that Nigerian output in September was 1.35 million barrels on average per day, which is higher than any other time in the last 19 months. And if you add that number to the output that came out as condensate as well, we're producing roughly about 1.6 million barrels. So in terms of improvements over the recent months, that is a welcoming one, especially as this current administration has committed to securing oil flows in the Niger Delta. But if we now look from the context of the impact on the economy, which is the crux of your question, I think it's just a right step in the right direction, and we are still not yet there. Because historically, Nigeria economy, or let me say Nigeria, do benefit more from oil when our output is sizable. I mean, in the region of 1.7 million barrels upward. So the Nigerian economy is more responsive to improved output. And that is why most time our budget benchmark for oil is always in the region of 1.6 million barrel upward. For 2023, our benchmark was 1.69 on average. And if you look at the ground we have lost between January and now, there was never any time that crude oil production without condensate has reached this level. So meaning that we have lost a lot of ground. And even though oil price this year has averaged above our budget benchmark of $75 per barrel, there's no gainsaying the fact that the loss in terms of what should have accrued to the economy in terms of earnings from oil might not be recovered. But we think that if this momentum is sustained, if we can continue to improve on the production, it will begin to impact the economy gradually in the near term. Now, speaking now to the impact on the economy, we do not really expect any near-term impact of this. Like I said, the volume is still short of what our budget benchmark is. In fact, in periods when Nigeria was able to build its reserves from sale of crude oil in the 2008 period, 2009, 2011, in those periods, we're producing oil in the region of 2.3 million barrels per day. And that is when you begin to see the significant impact of improved oil production. So this coming at a time where the CBN also yesterday announced that the 43 items that was banned from accessing FX in the market, I mean, the time the CBN is reversing that decision, it means that we need more FX. And if you look at the three major sources of FX to Nigeria, you talk of remittance, you talk of proceeds from oil, you talk of capital importation, maybe save for remittance that have been resilient in the recent years. capital importation has been very dismal. The last quarter was barely about $1 billion, where in 2019, in each quarter, we are doing almost $7-8 billion. So oil now is now like the second lifeline Nigeria is having, and we cannot do ourselves any better than ramping up production to improve FX flow, because now that the CBN has lifted ban on those 43 items, there will be surge in demand in the official window. And if the CBN is not able to supply adequately, then the anticipated gain from that policy might not come, because the stabilization of the FX rate that is expected to follow that move might not come. And that is why it is very important that we are getting it right in terms of producing more oil and curbing the activity of sabotage in the oil-rich region.
So right now to meet our quotas at this time, but what mechanism should be put in place to minimize the fluctuation in domestic crude oil production permanently?
Yeah, thank you, Ladi. So in terms of policy environment, right, what is actually lacking, or what has been the bane of our stable and large oil production is, one, what I would describe as lack of political will and weak institution. I brightly mentioned earlier that in during 2008-2009 period, when we were able to build our reserves to almost 60 billion level due to high oil output and higher oil price. One of the things that worked for us is that the cases of oil theft in the oil region is minimal, or perhaps maybe does not even exist in some cases. But from recent revelations, from activities of the security agencies, we're meant to know that almost half of what Nigeria is producing daily is what is being stolen, and you cannot continue in that way. So basically, our institutions, especially the security agencies, need to be more committed in discharging their rules. We have a lot of oil-producing countries last year that smiled to the bank just because oil price rose to an average of over $100 billion per barrel, whereas Nigeria economy, experienced a reverse. The contribution of oil to our budget revenue last year was barely around $1 billion. Well, barely around 1 trillion naira rather, where our expectation was around 2.5. So meaning the oil revenue underperformed by almost 70%. So we need the security agencies to up their game, and also the political will. One of the things that has helped, this improved level we saw in September is the fact that the current administration is doing everything it thinks it can do to ensure that oil produced are not stolen, and that is what we need. We need to enhance the capacity of our institution to protect our asset, because, for example, in countries like Saudi Arabia, for every drop of oil that moves from their oil rigs to wherever it is going to, they monitor it. So we need to advance to that level, and that is the only time we can have a permanent solution to oil theft in this part of the world.
And just a few days ago, the managing director of the NNPC Limited, Mr. Mele Kyari, announced that NNPC had returned, to be the sole importer of PMS due to FX liquidity. What impact do you think this development will have on the market?
Please come. Hi, Ladi. Can you hear me?
Oh, fantastic. I can hear you.
Okay.
Yes.
So I guess it was just a network glitch. So
exactly.
What I was saying is that it's never a good thing to have a monopoly of supply of any commodity. There are always significant downside to it. In recent years, when this NNPC had been the sole importers of oil to Nigeria, we can count cases of period where we have problem of oil shortage, oil supply in the country, because since NNPC is the sole provider, if there's any glitch on their side, then the whole nation will feel the effect. But looking at the situation we have now, where we have inadequate FX supply, I would advise that the decision of the NNPC returning to be the sole importer just be a temporary one, whereby the moment our FX supply begins to improve, the other independent importers should be allowed to do that for two main reasons. One, it reduces the risk of supply disappearance or supply shortage, and also the independent importers that are being deprived the opportunity of importing oil now would have problem in running their business. And this is an economy where we have unemployment to be at a very high level. So by and large, the signaling from the CBN, especially with the lifting of, reversing of ban on 43 items that don't have access to the official window, is that Nigeria FX situation will begin to improve. And we have seen some other moves too. We have seen moves to get loan of about 3 billion from Afrexim Bank. We have seen that the Nigerian government has also taken almost 1.9 billion loan from the World Bank in terms of trying to beef up our foreign reserve. And we are also blocking loopholes in terms of means by which our oil are being stolen. So if we can begin to pump more and we hand more, it will be better that the importation of oil be decentralized than in the medium to long term than being left in the hand of the CBN, I mean the NNPC alone, because of risk of supply, especially if there's any concern with the NNPC.
Right, so much to unpack then and address oil market. But what is your outlook for the global oil market, and how do you think it would impact, the Nigerian economy?
Concerning the outlook for the oil market, the outlook is not really very rosy in terms of I want to look at the demand level. As the global economy was recovering from the pandemic of 2020, there came Russia-Ukraine war last year, which had negative knock-on effects on global growth and demand level. And as if that was not all, we are now having Russia-Hamas war, Israel-Hamas war. And if you look at that region, it's a very critical region in the global landscape, because more about 2/3 of the world waterways are within that region. So an escalation of that crisis will significantly affect oil supply. Price might go up. Yes, you may think that might be good for oil exporting countries like Nigeria, but the negative consequence is that it will affect growth in the economies. And the moment it affects growth, especially major oil buyers like India, China, then demand will fall. And like I mentioned earlier, Nigeria economy, or in terms of gain, Nigeria benefits more when our output is higher and we're able to sell it than when price is high and we don't have enough output. Last year, oil price was over $100 on average, but our revenue from it was dismal, partly because of subsidy and partly because of the fact that when we produce more, it helps offset other costs that is associated with oil production. So by and large, in terms of demand for oil output, the outlook, especially between now and 2024, looks a bit bleak because of the crises that are emanating in critical regions of the world, which we do not even know how soon those crises will come to an end.
Right, I'm definitely hoping for de-escalation with all of these crises going on right now. Thank you so much, Damilare Oshimi, macroeconomic strategist, Afri-Invest Research and Consulting. Thank you.
Thanks for having me on the show.
All right, let's take a look at some market news now. See, the private sector needs to rise up to the challenge of sourcing long-term financing from the capital market to fund the provision of infrastructure in the West African region. And this is coming from the Director General of the Securities and Exchange Commission, Mr. Lamido Yuguda, who addressed a pre-event press briefing on the forthcoming West Africa Capital Market Conference set to hold in Lagos on October 25th to 26th. The SEC boss says there's growing need to adopt innovative financing mechanisms and sustainable financing options to mobilize the desired funds to meet the region's critical infrastructure needs. Take a listen.
Over the past, many years, the SEC has actually been really working with government. We have the annual budget seminar, which we have used really to encourage and to advise, the government to look to the capital markets to finance, infrastructure projects. That we have a very long list of demands that we demand of our government. We want free education. We want, good health care. We want the government to provide good sanitation. We want government to do a lot of things, for us. There is the issue of security. There's the issue of foreign policy. Infrastructure still needs to be financed. Now, government can use the capital markets to access the funding to finance infrastructure. Government can also use the private sector to enter into private public-private partnerships, to really deliver infrastructure projects.
All right, let's head on to the local bourse now. See, traded marginally higher as gains with Zenith Bank gained by 1.3%, and UBA offset the loss in GTCO. If you look at the board there, we see it's 0.05% there, marginal increase there for the local bourse, and we see equity cap sitting at 36 trillion there, 17.97 billion that was added. All share index year to date 51,595 to start the year, but now it's sitting up 30.99%. That's the year to date gains for the market. Let's look at the activity chart now. See volume values. Take a look at what's happening there. We see was a mixed picture there. Deals was in the red or green yesterday, and we see other parts. If you give me the activity charts, okay. Volume, that was in the red. Value, 4.54 billion. Deals, lost that 6,000 level there, 5,588. Let's look at the sectoral performance. See, banking, you're snapping all the losses we saw this week, 0.9% there. Consumer goods, also in the green, 0.1%. Insurance counter, that took a beating yesterday, 1.8% down. Oil and gas stays unchanged, and industrial goods. Let's talk to Oluwaseun Dosunmu now, Head Investment Research, Pathian Securities Limited. Great to have you on the show. Good morning.
Hi, Ladi. It's good to be here.
Yeah, good to have you. So now that the CBN has removed restrictions on the 43 items, what stocks do you see this move impacting?
Thank you for that question. Right now, I think it will be a bit early to determine what stocks will move. But if you narrow in a bit, you would see that it will have an impact on the consumer goods and the industrial goods sector. Those sectors might likely react to that policy. One of the other concerns we have is not just the policy, but the policy implementation, because we know that the major policies that have been announced this year have not been quite implemented quite well. And as such, Nigerians are losing confidence in the government. So one of the things that we're looking forward to seeing is the successful implementation of the policy, not just the policy announcements.
And do you see the market reacting at all to this?
I believe the investors might react positively to this information. Like I said, the implementation is actually what matters, because we know that the banks might also have their own policies in terms of disbursement of their funds or disbursement of FX when it comes to that aspect. So yes, I mean, we might see investors react positively to that, but we would also like to see a smooth transition of that policy.
All right, talk to me about market sentiment this week. How did you see performance so far? Did you think the bulls made it this week?
So generally, I mean, the market has been volatile, not just this week, but for the month. Historically, we know that the month of October has always closed in the positive, at least in the last 3 years, apart from last year. And last year's decline was majorly due to the loss from Airtel Africa. Right now, we're seeing that the market is hovering from between 66,000 points to as high as 68,000 points. This is not surprising, because in the last couple of weeks, we've seen that investors have been reacting to the consolidation of Dangote Sugar with NASCON and Dangote Rice. We've also seen that investors have also been reacting to the policies that were released during the second and third quarter. That has actually pushed market higher than anticipated this year. And as such, we expect some form of correction in the markets, which is why we're not seeing the usual rally in the month of October. Nevertheless, I mean, we're also looking forward to the release of the third quarter earnings. That will be a big determinant as to, what stocks and generally the performances of companies on the exchange. So we've seen that the activities in the market have largely been hinged on these factors. And as such, we've had the volatile nature of activities in the market, the yo-yo in terms of the market closing the positive today, negative tomorrow. We've seen that play out in the last at least couple of days.
Right, and definitely next week we're expecting inflation numbers. That should be on Monday. How do you see this driving sentiment in the market next week?
Generally, we know that our inflation is quite elevated, and as such, investors would have to cover that inflation amount for them to have positive real return. So we expect that inflation numbers will still remain elevated given recent macroeconomic activities. However, for the investment landscape, we know that for the last auction, Nigerian Treasury bills auction, we know that yields actually declined. That's for the stop rate compared to the previous stop rate. For the equities market now, attention, a lot of focus is in that space to actually see whether or not, investors can, still make some more money from that space. Our outlook is that, the market might still continue in this pace, at least for this month till the end of this month, and activities might start to pick up from November as investors might start to position ahead of, the likely dividend declaration in January. And as such, investors will also be looking at the earnings, corporate earnings, which will start coming out from the last week of October till November. That will be a big determinant as to whether or not, investors will come into the market in torrents or in trickles.
Right. And talk to me about your expectations now. What stocks are on your radar, going into next week, and what sectors should investors, put on the front burner going into next week?
Okay. While I can't discuss the stocks that we're looking at, I believe that right now the sectors that investors should start to watch will be the consumer goods and industrial goods, and also the banking sector, because these sectors have been resilient. We know that of recent, Boa Cement and Dangote Cement dropped the prices of their products. And as such, we expect, some form of increase in volumes. So, and regardless, the banking sector is always a resilient sector. Regardless of what happens in the economy, the banking sector would still, make money. We know that the policy implemented by the CBN stating that the banks should not spend out of the FX revaluation gains puts in quote a temporary setback on some of the dividends that we were expecting. But nevertheless, we still expect the banks to do quite well. For the consumer goods sector, we know that sector has not been doing quite well in the last couple of quarters. However, based on this new policy by the central bank, we expect, some form of improvement in that sector.
Right, definitely be looking out for all of that. Thank you so much, Oluwaseun Odosunmu, Head Investment Research at Parthian Securities. Thank you so much. All right, let's head on to other markets now. See, the Minister of Communications, Innovation and Digital Economy, Dr. Bosu Tijani, says the federal government, crypto developers and individuals need to have synergy to enjoy the benefits and reduce the risks of digital currencies. He made the comment on Sunrise Daily yesterday. Take a listen.
I think the biggest challenge with cryptocurrency, and not just for Nigeria, but all over the world, is that the way it's been built so far is quite strong in supporting opportunities for individuals while ignoring sovereignty of nations, right? This is a fantastic means of exchange that almost proposes a new way of bypassing existing formal system. It serves the individual really well, which is fine. But what we need to be conscious about in Africa is that we're still building our nation states, right? And not everyone will be on crypto, but what will happen to those who are not enlightened enough to be on crypto? But beyond also being on crypto, if a system threatens your sovereignty and you don't have a clear understanding of how to manage it, do we say to ourselves that we do not need a nation to be able to support everything that we want to see? So my approach to crypto is actually saying there's a need for both the users, the producer, but also government to have a significant understanding of how to work with it. It's a fantastic opportunity, but we must understand its implication for our sovereignty as a nation. How do we manage it such that it doesn't compromise our sovereignty as a nation, but but also use it in such a way that it can provide opportunities and benefit for our people as well. We've been able to demonstrate the value for people, which is great, but I think we've not been able to understand how best to manage it for sovereignty of the country as a nation.
Joining me now is Shehu Dania, CEO, Trade Father. Great to have you, Shehu. I'm sure you saw and heard what the minister had to say there, but looking at the nature of cryptocurrency, can there really be that synergy, between the government and the crypto industry?
Good morning. Thank you for having me. Yes, very much there can be, and there should be synergy between the government and the cryptocurrency industry. So Bitcoin for itself, the white paper was published in 2008, and that's 15 years ago. So definitely we know that cryptocurrencies are here to stay. What we should do is, invite the industry and industry stakeholders to a round table, to have these conversations on how to properly manage these things. It's actually, something that even at the last UN General Assembly, there was a side meeting whereby the IMF and the FSB presented a paper, recommending to all nations on the need to regulate cryptocurrencies. We can recollect sometime last year, we had some meetings with the NFIU where they specifically said that Nigeria was on the grey list by the Financial Action Task Force because we are unable to, monitor and report digital transactions in digital currencies. So the government not working or trying to even come with the crypto industry is only just making the black market thrive. And black markets, not just in the crypto industry, basically in every other industry that the government doesn't have oversight.
Oh, definitely, with the decentralized nature of Bitcoin, definitely it appeals more to the individuals. And he talked about, maintaining the sovereignty, of the state. We've seen some countries, adopt Bitcoin as a legal tender. Have they been any better, looking at those countries?
So implementation is always different across the world. For us within the industry, what we believe that should happen, the government doesn't have to take Bitcoin as a legal tender. What is important, cryptocurrencies is just beyond Bitcoin now. There are several cryptocurrencies, as we all know. There's Bitcoin, there's Ethereum, there's Ripple, there's Monero. There are all kinds of cryptocurrencies. So for what the government needs to do is first to create a sandbox environment that actually brings together all the entities, all the individuals who are willing to partake in that cryptocurrency space legitimately. Thereby, the government is able to have oversight. About a few weeks ago in the UK, went live with the travel rule. The travel rule states that everybody is also, a standard by the Financial Action Task Force, that everybody who's transacting in digital currencies, cryptocurrencies above a certain amount, should be able to report information about the people who are transacting. So basically, like I'm transferring money from my bank to your bank. It carries your information saying I'm sending money to Ladi from Shehu. That way, the government knows and they're able to, trace illicit funds. The major thing about it is people have decided to use cryptocurrencies as an alternative means because they believe there's a failing system. But we are not, everything was how we started, decentralization. But the people who are partaking in the businesses know that, well, sure, regulation is necessary. The government needs to have oversight on transactions. If the government works with the people within the industry, then you know that anybody else who does not want to report their transactions to the government is definitely a bad player. And then the government can then, take action, but not trying to regulate, not trying to work with people within the industry. I think it doesn't work for us.
Talking about regulation, we've seen, a lot of exchanges, globally, exchanges like Binance and Codave, and they've been under a lot of regulatory pressure, lately. How do you see that, going forward? Do you think at some point there'll be some synergy between the exchanges and regulators?
So what is currently happening is, and I believe it's bound to happen because it's a new technology, is every country is coming up with their own regulations. So that's why the exchanges are having challenges, So the US has their own regulation, the UK has their own regulation, the UAE has their own regulation, the EU is coming up with a different regulation. So at every point in time, the exchanges are already operating within these countries, but then regulation then starts to change and then they start to have challenges. So either they go out of that market or they conform with the regulation. But I believe, and I strongly know that what the world should do, because it's already a global economy, everybody is working together. What the world should do is we follow the financial system. They trust the IMF, they trust the World Bank, they trust the FSB. These institutions have done extensive research and they have put out, frameworks on how most countries should operate. It's not compulsory, you take some of that information and adopt it to your own local businesses. And then you take it from there. If the whole world is operating by a global standard, like the FA, the Financial Action Task Force, is a global standard that, financial institutions are operating by. And everybody's able to report, these transactions. Everybody's able to do business globally. So you should take the same stance with cryptocurrency industry, whereby all countries work together, as opposed to each country trying to build their own unique regulation. Because cryptocurrencies go beyond borders, and if all countries are not working together, it's just recipe for chaos.
All right, let's look at the market now. See behind me, it's red is the color today. Going into next week, what are you expecting for price action?
So, of course, I wouldn't. This is just my own, personal opinions, based on my own, little analysis. So no one should take it, hook, line, and sinker. Next week, we probably will still see on the Bitcoin side, we'll probably still see a little downtrend. And let's also remember that the global macroeconomic state, is showing. A lot of countries are having challenges, and on the regulatory side too, like you mentioned, exchanges are having issues where people who are building cryptocurrency projects are also having several issues. But on the bright side, I think Ethereum has a merge coming up, so I think Ethereum would definitely to see an upside for the Ethereum. And generally, for some good news, it's we've seen a lot of industry, a lot of business, a lot of industry participation, different businesses, the financial institutions globally and even locally are beginning to adopt some kind of cryptocurrency. I know I saw in the news that one of the big fintechs announced a partnership, with USDC. That's one of our local ones. So as we are seeing industry adoption, it gives credence to the use of cryptocurrencies, not generally, for individuals, but as businesses. It fast tracks transactions without a doubt. And with more industry, with more business adoption, we'll see, general interest in the other ones that we can see an uptrend. But for next week, I think it's still the same way that it is, either down or
down or up. All right, thank you so much. It was great having your perspective there, Shehu Daniel, CEO, Trade Father. Thank you so much.
You're welcome. Thank you.
Right, and yeah, as you see behind me, the color is red. Friday. Me and Nini always talk about Fridays having that red hint there, and that's what we see. And just a couple of green pockets, and fear. Fear is the sentiment right here in the crypto market. Looking at the fear greed index there, 44 points of 100, showing that traders are quite fearful right now. So that's how the market is looking today. And that's a wrap on the program. Thank you so much for watching. Don't forget, you can join us at 1:30 on Business Incorporated for more updates and developments in the world of business. And even though it's Friday the 13th, I wish you a lucky trade today. Thanks for watching. I'm Ladi Williams. Bye for now.